What if I told you that you could save tens of millions of dollars, all with the help of this underutilized section in the tax code? It's called QSBS, and it could become one of the most powerful wealth strategies in America. And in this video, I'll tell you how you could keep millions in your pocket completely tax-free. QSBS, also known as Qualified Small Business Stock and Section 1202 stock, is in Section 1202 of the tax code. And it's a tax benefit that lets founders and investors exclude huge capital gains when selling their shares. So here's why this matters. This isn't a deduction, it's a full exclusion, meaning that when you sell your shares, you pay zero federal tax on capital gains on certain qualifying amounts. Think of QSBS like a tax invisibility cloak for your startup shares. The moment you get those qualifying shares, you're wrapping them in this special cloak. If you hold them for at least 5 years, when you finally cash out, the IRS can't even see those gains. They just vanish from your tax bill. And with the new One Big Beautiful Bill Act changes, that cloak just got a lot bigger, covering millions more than it did before. Now, before the One Big Beautiful Bill Act, the capital gains exclusion amount limit was the greater of $10 million or 10 times your initial investment. But now, the new act raised that capital gains exclusion to $15 million or 10 times your investment. That's a massive change because it's an extra $5 million that the IRS can't touch if you qualify. Now, to qualify for this exclusion, you must own original issue stock from a C corporation whose company value is worth $75 million or less at issuance, and it must be an active business. It also can't be used for real estate investing or be used for professional services. You must also hold the 1202 stock for at least 5 years before selling it to get the full exclusion amount. However, the new One Big Beautiful Bill Act tweaked this rule to allow some stockholders to get a partial exclusion amount. And here's how it works. If you hold onto the stock for 3 years, you can exclude 50% of your capital gains. And if you hold onto the stock for 4 years, you can exclude 75% of your capital gains. This gives QSBS stockholders some incentive to sell their stock before 5 years. But you still need to wait the full 5 years before you can reap the greatest benefits. Now, all of this is really complex, which is why I want to give you an easy example to show you how QSBS works. Let's say that America's favorite entrepreneur, Elon Musk, decides to start a brand new company. Maybe we could call it Mars Mart, the first convenience store chain on one of his Mars colonies, all over the planet. He forms it as a C Corp in the US, which is critical because QSBS only applies to certain domestic C corporations with less than $75 million in assets at the time of issuance. Elon then invests $1 million into Mars Mart in exchange for QSBS qualified shares. Now let's fast forward 6 years, and let's say that he developed a lot of colonies on Mars. Here, Mars Mart is wildly successful. It's like 7-Eleven, with stores on every Martian crater. And Elon then sells his shares for $15 million. Now, under the old law, he could exclude $10 million or 10 times his initial $1 million investment. So here, only $10 million in gain would have been excluded. But under the new act, he can exclude the entire $14 million in gain. But here's where it gets crazy. If instead he had invested $5 million, he could exclude up to $50 million in gains, completely tax-free. And here's why it's a big deal. For high-growth startups, QSBS can literally mean the difference between retiring early or giving a large chunk of your gains to the IRS. And now, thanks to the OBBBA's higher limits, it's even more valuable. But here's the catch. You have to know the rules. The company must be a C Corp. It must be an active trade or business that's not an investment or professional firm. You must get your shares at the original issuance when the C Corp starts. And you must hold on to them for 5 years to get the full capital gains exclusion amount. When you plan your structure, timing, and exit strategy now, you will capture the full benefit later. And this is why it's crucial to have both a good CPA and a good attorney guide you through these issues. Now look, QSBS isn't just for billionaires like Elon Musk. It's for any entrepreneur or investor who's willing to start early, follow the rules, and think long term. And with the One Big Beautiful Bill Act changes, the upside just got more enormous. If you're starting a business or investing in one, this should be on your radar, because paying zero tax on millions of dollars is definitely a savvy move. And if you need help forming a C corporation to capitalize on the QSBS stock, you can schedule your free 15-minute consultation with one of our team members at Corporate Direct by clicking the link in the video description below. We also have a product package called Smart Start that's specifically tailored for entrepreneurs who want to take advantage of the 1202 stock benefits. Now look, I hope you guys found this helpful. And while you're at it, please make sure to subscribe to the channel. And let's keep building your wealth the smart way.